Good morning, everybody. Long time no see. How's everyone doing? Hopefully, you all had a really nice weekend. So, a couple announcements. One, the crude oil report is tomorrow, not today, because of the 3-day weekend. We do have pending home sales coming up, which hasn't really moved the market much lately, but it's something we should still respect and pay attention to. You never know. It's been downgraded to an orange label report. And then today is Beige Book Day. Ugh, we all know what that means. Beige Book. Last Beige Book wasn't so great. I don't know why. It happens 6 times a year, and we talk about it all the time. But the markets don't tend to trade very well, usually, on Beige Book Day. But that doesn't mean today will be like that. You just never know, but it's something we should just pay attention to if the markets just kind of look overall unattractive. That could be the reason. As coincidental as that might be, or who knows, maybe there's some causal effect for that. I don't know. But it is what it is. Take a look at what trades are happening here. The Euro US just triggered into a short trade. You can get in sync with it, perhaps, right near the entry. And this is based on this short from back here, because the trend mode, this is one of those white trades that come back after, flipped over to red barely, 1 bar. That was enough to bring the setup back, which triggered in before it went blue. And if you haven't gotten into it yet, you have to make a decision if you want to take it or not, because you don't know if this is going to be red or blue. It was red when it triggered in after our start time. 12.16, small trade. You at least have to go to target 2 on that for just 11 pips and 15 pips to target 3. And the stop, you should move up to 23.01. I'm sorry, 11.31. Misread that. 12.31. I knew I'd get it right. 12.31. And you may, I don't know, I can't advise you on this. It was legit for the 1 bar. So maybe that's enough to get in sync with it. But that is the trade right there. You also got, you're also in the chop mode here. So that's another thing that would cancel that trade. All that happened before it got short. I'm sorry, it happened after it got short, didn't it? Got short, and then it went into chop mode, and then the line went blue. Hopefully I didn't just thoroughly confuse everyone. Let me know if you have any questions on that. All right, and crude just got short here, or is now a legit trade. Hasn't quite got short yet. At 44. Normally I'd want to move that to 43. Down here is, I'm sorry, 54. At 54, 53 is 1 tick below that. If you want to make a 2-tick adjustment at this point and get short at 52, 48.52, going to 48.38. since they're already kind of bounced off this, what appears to be a little bit of support forming here. Just want to say hello to any of our newest members here. If you're brand new to Counterpunch, don't be shy. Feel free to ask questions if you don't know what's going on, or any question, it doesn't matter. Just want to make sure that you're comfortable with what we're doing, and I know it's brand new to some of you, and it could feel overwhelming at first. That's normal, but use our time together to get some of your questions cleared up, because this is what we're here for. The calculator thinks that the purple trade is already short. You can see it's tracking it along the top, so we have to just pay attention to what happens here. It is in the chop zone, but that's below our 50 EMA filter, so this trade is still legit, still valid. And a good sized trade, 16 ticks before we adjusted it. Satvir, good morning. Hello, Rashid. I'm glad you guys stepped up to say hello. What makes this such a valuable or added value trade room, of course, is everyone interacting with everyone. All right, just got short. See, one of the things, if you're new, what you have to learn how to do is stay in sequence with the trade we're following, right? There's a particular order. And the purple trade being the one that was the active trade at our start time, or the newest trade, happened to have triggered in a moment before we started. So we're just looking to pick that trade up, and then decided to adjust it a couple ticks down because it barely touched the entry and then was rejected. So that can show you some near-term support. Then we want the price action to push through it for a little extra confirmation. And then when we look to the left, there was another support area, just one tick lower. And so we made the adjustment of 2 ticks. And as you can see, we paid 2 ticks. Would have been better to not make the adjustment because it went through anyway. But you know what? That happens. It's like insurance, one of those necessary evils, I guess. You have to pay it. Where it would have paid off is if it didn't come through and push through and instead went up and stopped out, then we would have avoided a losing trade. And that happens enough so that I still think these adjustments are worth it. But small adjustments, right? 1 or 2 ticks, that's it. Maybe 3 at the most, 4 rarely. Rarely, very rarely. Keith, no, the adjustment was more of a chart level thing. As I said, it just touched the entry right before we started and then was rejected. So that price level was already revealing a little bit of support, especially when it did that twice. There was another rejection of that level, one over to the left. And then if you look a little further, and I don't like these multiple adjustments, but since it was only 2 ticks, it made sense to me. But you could see it also got rejected at not only at 54, but at 53. So to me, it made sense. Let's make it push through to 52. And if it can't do that, we don't want to be short. The other thing is the 50 is pushing up weekly, but it looks like it's trying to get to the 200. And the 200 is putting up a fight with some resistance up here. So remember, it's always a testing area when the 50 is pushing up towards the 200. Will it push through? Will it be rejected and roll back down? It's showing signs of wanting to roll back down. And those could be really good trades. Those are the kind of trades I like to be in. When it can't quite get to the 200, fails, and starts rolling down. I also like to be in it when it is getting to the 200. Then you want to be long. And of course, you don't know what's going to happen. But the strategy has an uncanny way of knowing most of the time. So I think we're on the right side of the market. Now we just need the price to go a little further down. All we can do is put the odds on our side, right? But that was the whole reason for the 2-tick adjustment to start. And it's a stylistic thing. Some of you might think, well, every time I give up 2 ticks, that adds up over time. Maybe it's better just to go with it and damn the torpedoes and not make the adjustment. Getting short at 54 and making 16 ticks is certainly looking better than getting short at 52 and only making 14 ticks, right? Plus 2 more ticks of risk on the stop side. That's if it goes, now we have the benefit of hindsight. But before that, we didn't have the benefit of hindsight. So that's where those 1 or 2 tick adjustments, you have to make a commitment to them. Either do it or you don't, and then try to be consistent with every trade decision you make. Pam, I think the sound is good. If anyone else can't hear me, I guess you won't be able to respond. Pam, can you hear me? I see the okay. All right. Yeah, it must have been a momentary internet thing. So you can see that crude has got a lot of spikes on the bars that you can see. Lots of wicks on every bar. I'd love to get one and done today and just get out of the beige book way, get out of the way of this session with beige book being what it is. And now we're trying to hit our money management level of 44. A few ticks to go. Okay, so meanwhile, there's a long now on the Euro US at 12.26. If you happen to get short, you probably want to get long at 12.28, and that puts you right. That's a tough one. 12.29 maybe. As you can see, you're right up here near the top. So not maybe the best place to get long. Maybe you do want to make a 4-pip adjustment on this one and try to stay short. That's a tough one. If you're not short, maybe you just hold your nose and take the trade right at 26. Swing levels are broken all the time. And now missing money management by 1 tick on crude, bouncing off the nickel, the 45-cent level. And, if you miss money management, you have the option of putting your stop 2 ticks above the signal line. If you want to reduce your risk, that could bump you out of a winning trade, but that's something that you might want to do. Missing money management by 1 tick, it already went pretty far. Well, it hasn't gone a full 10 ticks, so that's the other thing to consider is that we only got 8 ticks after our adjustment, right? 8 or 9? No, 8. We get 9 ticks. 7 ticks. That's probably not worth adjusting. If you want to mitigate your risk, you can move your stop and maybe hide it a little bit above the 200 or above the swing level. All right, now it's hitting money management. Now you can lock in 1 tick. The stop here says 51. You might just keep it at 52. Same theory, right above that little spike. Full target, guys. Take your money. One and done on beige book day. Yay. Move your stop to 46. You're trailing. Notice those 3 green trades. We just ignore them. You can turn those off. It's, sometimes we'll use them, just not today. Thank you. Thank you, K&M. Yeah, Hog. Thursday, no oil report today. Instead, we got beige book. But you know what? We survived it, at least with crude oil. This will be a one and done session, power of quitting. All right, so we know what's up with that. 46 is the stop. Let me ask a question. Did anyone get short the Euro US on that 835 setup? What's the beige book? It's some economic report that comes out. I don't know the details. You could look up Google and Google it. Forex Factory will show you. It happens in the afternoon. It's a yellow label report, one we typically wouldn't pay attention to. It's just what I've noticed, coincidentally, comes out 6 times a year, is that the markets kind of trade like crap every time it's a beige book day. And when I say every time, I mean a majority of the time. Nothing's absolute. Today might be the mother of all great days for trading. I don't know. But judging by the pound US, as you can see, which has a long, by the way, and you should adjust that above that high. 28.53, go to 28.56, a 3-pip adjustment. Looks like it might cancel in a moment. And crude, stop pushing lower, now at 36. Remember, if you're trailing, if you're in CPX, it just stopped out at 36. So that's all she wrote. But a target 2 winner, target 3 winner, out at 36. You were in at 52. Not bad, 16 cents on the trailer. What I was going to say, though, notice that the trailer is trailing 2 ticks above the signal line with every bar that closes below the signal line. So hopefully you've gone through your training, and I'm saying this for the benefit of the newest members. There's a specific way of trailing. You could do it with the tracking, but you should also know how to do it without the tracking, because just say we happen to be in one of these darker green trades. The add-on trade maybe was our first trade of the day, and that could be the case sometimes. The calculator is not going to track that. We have to know how to do it ourselves. So it's important to understand the trailing technique that we use. Once an earlier trade starts trailing properly, then you could borrow that. So even if you're in the green trade, one of these green trades hits money management, and the purple trade that is being tracked earlier is tracking the trailer, you could borrow the trailer. It's going to be correct even for the green trade once it hits that money management level. But it's a good idea to understand the technique and know how and why it works the way it does. So crude is done, one and done. That's kind of all she wrote, and now we get to kind of keep each other company for the next 25 minutes before the market opens. Well, Andrew, yeah, okay. So good question. They're both valid. I mean, if you were in the white trade, I kind of gave you a reason to maybe talk yourself out of it if you didn't get in on time, because all the filters came into play. And remember, this white trade short is really this gray trade back here with the 2-pip chaser chasing the entry lower by 2 pips. And there was only one chance to get in, and that was 5 minutes after our start time, basically. So probably was news in there. So if you're not short, then the long is valid. If you are short, then it's, probably a stop and reverse situation, but you probably also want to get above the swing level here. Just looking at the chart, it's the high of the day. It's the high of the, high of the day. Definitely in rally mode. 12:30. Man, I should have went to Europe when it was 12:07, 12:09. Or however low it was. Anyway, the point is, purple trade is valid, but you may want to adjust around. That's like a 4-pip adjustment to get above that high of the day. Sure thing. K&M on all Fed reserves. I'm afraid I missed the context of your question, so I apologize. I'm not sure what you're asking. Don't forget there's a long trade hiding over here. This is an add-on trade, you can see. The purple trade already got long. You could make an argument to get in sync with the purple trade. So really the purple trade is actually valid for this trade plan, and you could have been long, still could be. Not sure if you want to be, but that purple trade happened, and then right in this area here, 840, 845, right when we were logging in, you had the chance to get in sync with the purple trade. So if you're not in that one, you have the green trade, and always go with the newer trade. That's just the typical rule we follow to keep things simple. So then you wouldn't take the purple trade. If you didn't get it, go with the green. That can keep you flat, and it's a smaller adjustment anyway to get above the swing high of the day. I think that's the high of the day. Yes, well, no, there was a higher price earlier. Not the high of the day, even though that was yesterday. The high of the session. Depends on where you are in the world, I guess. Oh, there you go. Thank you for that. Okay, well. Yeah. So pretty important report, I guess, even though it's just a yellow label when it actually comes out, but it seems to have an effect on the markets. So while we're at it, I guess I'll show you one of the one of the spotlight trade plans that I've kind of developed. This is using crude oil in a 610 tick chart. Just give you a little preview. This will be coming out in the next couple weeks, I think. So 610 tick. You can see I start this one at 8:30, so you can see there's a get in sync possibility here. Pretty nice looking trade. Long trade was good. I mean, you could make an argument to maybe trade this during the European session if you wanted. I'd want you to test it, of course. pretty slow, but there seems to be nice moves, and I think you've all noticed that with counterpunch chart. So that's a nice looking chart there. Slower, definitely is slower, fewer trades, but pretty solid. And another one that I like, not sure if it's achieved trade plan status yet, but seems like it's going to, would be this. This is a 5-tick. I'm kind of torn between a 5 and a 6-tick momentum bar. And, is start time 8:30? Maybe. Otherwise, this would be the first trade of the day here. But you can see also we know that the price moved down, so clearly it was a good move. Really nice target, as you can see. That was same market, different chart. The long trade worked, the short trade worked. It's a momentum bar. Spotlight trader. Spotlight power trader, I should say. All right, well, we got, 18 minutes before the market opens, so I'm just going to mute the mic. If anyone has any questions, feel free to ask, and I'll talk to you guys momentarily. All right, guys, sorry, stepped away for a moment. Jeff asking, are we having a live room any other days this week since we did not on Monday? Jeff, no, we're not. In fact, tomorrow I have to do a live demonstration and won't even be available. So yeah, no. I take advantage of the 3-day weekends, which I suggest everyone else do the same, but no, I'm not going to change the schedule for that. And then Keith is Spotlight going to work on MT4, and I'd like to say eventually. I'm definitely going to lobby for it. Here's the thing. Spotlight excels with charts that are not time-based. Tick charts, range bars, Renko being the 3 favorites where it's just really, really great with. Time-based charts, I think I can make it work, but I just have to give it more time. I have to continue to research that. So the decision to not do MT4 was based on that. And also just time, just getting it ready on time for June. We didn't want to wait any longer. So I'm going to work on it. As far as time-based charts, I think there's a formula in there that's going to work with Spotlight. But the way it's working now, your best charts are your dynamic charts, the ones that are actually price action based, not time based. No, Jeff, it's counterpunch for new people who are considering getting involved with counterpunch. It's not anything that you guys will need to be at. You're already here. Spotlight, though, is going to get demoed coming up. Today's the last day of the month, right? So June, definitely in June, coming up. And I'll let you know, I'll be out of town the 3rd week in June. So it's highly likely it will be the 2nd week or, maybe midway through the 3rd week, somewhere in the middle of June. Netpicks hasn't announced the date yet, but it's coming. Working hard on it every day, just getting it ready, getting the Owners Club set up, getting the training videos finished. Bunch of stuff. The beta testers are Still ringing it out, making sure everything is good. So far, so good, though. It's going to be working on Ninja 8 and TradeStation 9.5. It's not going to be made available for the earlier platform versions. So the newest stuff. Can't stop progress, right? No point in trying. You can see the Euro US did get long, but not if you made your adjustment. Same with the Pound US, I think. Let's look at that one. Well, the Pound US canceled. Hopefully you guys are paying attention. You had your closes below. And a new long now at 28.56 is very convenient because that already is pre-adjusted. It's above. I mean, that's 55.5. So half a pip above the high there. So you might want to just go to 5.7, make a 1 pip adjustment. Considering it's the beige book day, I mean, Pound US not looking like the best trading chart at the moment, but it could break out. Been in the chop zone for well over an hour. If you guys are in the inner circle, you've seen a lot of spotlight examples lately on the Facebook page. Hopefully you've been checking in there. I've been putting daily examples up regularly. I mean, there are going to be some things that I'm not going to want to use spotlight on. Like when the crude oil report comes out, I'm still going to use counterpunch. I mean, that's just too good not to. Sometimes, you just stay on the winning horse. You don't need a better winning horse. If it ain't broke, don't fix it. That's what I think. But spotlight works too, just not, I think counterpunch just gets it done quicker, in my opinion. I'd much rather stay with that. So here's what I think. I'll show you this. Let me just, if you're a Forex guy and you want Forex, I really love how Spotlight works, but not on time-based charts, at least not yet. So if you have access to another platform or you're considering another platform, this might be the time to do it because it works so well. So we've got a few minutes here. This is the Pound Aussie using an 8-pip momentum bar. I really like this chart as a day trade chart for Forex. And you just see how smooth, whoops, This might not be the newest calculator. Let me just. Oops. Yeah, I turned it off by accident. There we go. Yeah. See? Nothing yet at our start time, but you could make the argument to even start earlier, I guess. You obviously got to test it out, but you can see really nice looking trades in here. Looks like I got add-ons turned on as well, and that's something I typically wouldn't do. You don't even need to turn the add-ons on. Ninja 7. Well, I mean, go to Ninja 8, Keith. No reason not to, and you could run them both simultaneously. Just download it. You have access to it if you're a Ninja person. As far as TradeStation, I just rather work with TradeStation, but I know it's a personal preference. There's a lot of good reasons to use Ninja. Ninja does a lot of things better than TradeStation. But you go with what you're used to. For me, developing strategies, I like the dexterity and the speed that I have of moving around with TradeStation. Is one of the reasons why I stay with it, because it's just easier for me. I got tools that I use that work great for TradeStation, so that's how I develop stuff. But Ninja's fine. Ninja's good. I like the way it works. There's just things you have to get used to with Ninja. You already know that because you use it. You can do fine with Ninja, but you have to learn how to trade your own charts. So, in the end, it's you and your charts. But it won't work on Ninja 7. You're going to want to use Ninja 8. And I also am a big believer in having multiple platforms and multiple broker accounts. And just as a general evolution of your business, Keith, it's something for you to think about. If one of them goes down, one of them freezes up. If you want to trade the same market, one on a swing trade, one on a day trade, it's just good to have two accounts and two platforms, and just being able to, both things do stuff good. And it's, in my opinion, having both wouldn't be a bad thing at some point as you evolve and grow your business. Even Thinkorswim, if you like the options ability that offers, using conditional orders with the stock or ETF to buy and sell calls and puts based on where the stock price is. You could set it up properly. All right, so markets are open. We're waiting on a fresh setup on the Russell. Got the blue line to follow. Got two YM charts, the 6-tick and the 377. We'll take a look at soybeans in a moment. Soybeans does have a short right there, 912 and a quarter. Going to 909 and a half, 908, 906 and a quarter. We'll come back to that YM 377 in a moment. I don't know what that is, so I don't have any words for it. So big gap open on the U.S. You look at the .D charts on the E-minis, you can see the gap to the upside. And a lot of people joining us over the last several minutes or so, so welcome everybody. Again, if you're new to Counterpunch, say hello, let us know who you are. If you have any questions, don't be shy. The Russell is one of those markets we don't get in sync with. We wait for a fresh trade. Motive Wave is another platform. I'm just not familiar with it, Keith, so can't say anything. I mean, I kind of like the idea of, I'd love Netpicks to expand to other platforms, but there has to be enough people using it. There's got to be a demand for it. There's an enormous amount of resources that goes into the customer service side and the development side as far as coding up the software for a platform. And, we need more than 3 or 4 users, right? I mean, they used to do eSignal, they dropped it, not enough interest. They used to do Sierra charts, they dropped it, not enough interest. The two gorillas in the room being TradeStation and NinjaTrader with the mass appeal, and of course MT4 and Thinkorswim to some extent. But a lot of people trying to turn Thinkorswim into something that it isn't. It is not a good day trading platform. It's terrible. So let's not try to make it one. I think that's just foolish. You're better off spending a little extra and getting the tools you need to be successful. I don't think Thinkorswim's the answer when it comes to day trading. In my opinion, you could do it. I've struggled with it. I've had success with it, but you don't want to be the guy hopping around on one leg when everyone's cheating and hopping around on 2 legs in the one-legged butt kicking contest, right? With Ninja, you're still hopping around on 1 leg. Soybeans getting short. The red line showing up on both YM charts here, so heads up. No setups yet. Still waiting for a Russell. Markets are kind of slow right now. There's a short on the Russell. First trade of the day on the Russell right there. Heads up. 1372.4 going to 69.6. And the stop is at 75.1. Yeah, sure, Keith. There are platforms out there that are white label. In other words, there are some platform providers that make their platforms available to third parties. And what they do is they just change their name and put on their own label. And so, that's kind of interesting if you got something that you really like and works well. I mean, it is possible you can use another provider's platform and you might like a chart that you only get on that platform. Maybe you use it as extra corroboration, extra confirmation. But those are things you have to test, and it's very hard to test. You could do it. Anything that makes you money as a trader, I'm all for. I don't expect you to stay stringent and strict to the dots if you've got something that's going to improve what you're doing. Counterpunch is very versatile. You can certainly include your own style and your own additional ingredient, whatever that is, but I would just say follow the steps in the success guide. That'll always keep you in the right path. Mark, there are alerts. There are alerts on TradeStation, I believe on Ninja. I don't know about MT4. Well, it's not that I don't like the NQ. Sometimes I love it. It's just that I just prefer the Russell. But the NQ is a 1/4 point tick. So that's another thing I'm not crazy about, because every tick is a larger percentage of the trade. So if I'm going to do NQ, I'm not going to use key level adjustments, for example, because every adjustment is a larger percentage of the trade as well. You see, so you got to be careful because trade costs will eat your lunch. And it's just an additional challenge. I'm not saying it's not good. I think it is. I think the 610 tick does very well. And I'm sure there's a range bar that would do well. Maybe a 6 tick or an 8 tick. Well, Keith, you should, and it's not a bad idea to keep your options open and to pursue and explore, and I think that's a good thing. I'm all for it. I definitely endorse that. And you don't have to stay away from a platform that you like just because Counterpunch doesn't work on it. You might still find other things that you can do with it. I mean, Forex here is like watching the National Derby of racing snails. So let's take a look at NQ. Thought I had it already handy. There it is. So NQ does have a short. It did get short right there, and that was it right at 58.10. See, I'm not going to make a one-tick adjustment, which it pierced through anyway. Quarter point tick. Although these trades are good size, I mean, 29 ticks to target 2 at $5 a tick, not bad. It's a good size trade. 25 ticks of risk. You know, those are good size trades. They're decent. Smaller accounts could probably handle them. But, you know, you got to do your back testing and make sure you're really clear on your trade plan and stay very stoic. And don't overtrade the NQ. There are days when it's just not going to work. Try to get it done quickly with a few trades, 1 to 3 maybe. I don't know. You have to test that with a fast test. The idea is quitting positive on most sessions. So make that your theme, make that your goal, no matter what you do. Most of these charts will get you there if you're disciplined. All right, so the Russell did hit its money management level, lock in one tick. And you're noticing I'm using a range bar. That is not the same as the Ninja range bar. It's a unique chart to TradeStation. The momentum bar is equivalent to the Ninja range bar. With Spotlight Power Trader, I've got a Russell plan for the momentum bar, not the range bar. I was very mindful of that because I realized this one here, this range bar, just kind of happened organically here in the trade room. It wasn't like we intended to do a chart Ninja can't do. I think someone asked to look at it, and I opened up the range bar. We looked at it, and we haven't been able to turn it off since. I mean, the thing's been phenomenal. Yeah, as far as MT5, that's definitely interesting, Keith. I mean, I should probably bring that up with Netpicks and see what they say about that. MT5, that's a free, I mean, are brokers using it pretty much, or are they still, I mean, again, it's got to be mass appeal. I've heard a lot about MT5 over the years and never really seen what it can do, and I just don't know if it has a user base that'll substantiate Netpicks' interest. Stops move down one tick on the Russell. So you can move your stop down, 1372.1. Well, free is good. I mean, I hope. Free isn't always good, but the fact that it doesn't cost anything, the thing is, are people using it? Because, again, it might be one of those things where, you know, familiarity. It's hard to get people off what they're used to. And MT4's got the mass appeal. I don't know that MT5 does. Mark, yes, I would say yes. And you know what? Here's the thing. The setups on the Thinkorswim charts are just fine. They're going to be based on your own data. and they're going to work. They're not going to look the same as mine. They're not going to, look the same as a Ninja platform either. They're going to be fine on Thinkorswim. But then you have to get used to trading it. One thing you have to get used to is waiting for the bar to close before accepting the setup. Because what Thinkorswim will do, it'll start printing the setup even before the setup bar is closed. So that setup will change. It might even go away. And so you don't want to get trapped into a setup that's not a valid setup. Nothing you can do about it. That's how Thinkorswim works. Moreover, the data window is worthless. That doesn't work on Thinkorswim. There's no way to freeze it, right? You can see it, you can look at it, and as soon as you move your mouse, it changes. And there's no way to freeze it. Another piece of stupidity, thanks to Thinkorswim's great engineering support that hasn't done a thing to fix it. We've been complaining about that for years. Moreover, their active trader window is a piece of crap. Believe me, because I've been using it every day for a long, long time. It's gotten worse and worse. The more users they add to it, I guess. I don't know. But it jumps around. It's like trying to hit a moving target, even if you tell it to not move. You could set it to not move. Heads up on the Russell. The Russell has a stop and reverse at 1371.6. Didn't quite get to target 2. Got halfway. Partial winner if it stops out. Hopefully it goes lower and stays short. Still flat on both YM charts. No trades. Unfortunately, the soybeans did get short, but didn't go very far. It's still short. We'll see what happens with that one. So those are the main issues I have with Thinkorswim, Mark. Because I've got mine set to not jump around. It's not supposed to move except for every 9,000 seconds or whatever. And yet every time I try to grab a handle to move, to slide my, you go in with bracket orders. And I used to love the platform. It used to work great. I like the fact that they don't take the other side of your trade. The slippage is usually better, I've found. But if you can't hit your targets because it's like trying to hit a moving target from a moving car, right? You click on it and you're like, how did my handle get 10 cents or 5 ticks off of where I clicked? The thing starts hopping around right when you need it to be frozen. And it's not supposed to. That's the other thing. And it does. Trust me, it does. And that you have to learn how to deal with all that. And you know what? Trading's hard enough as it is. So additional challenges because your platform is just lame, to me, is a poor choice. If you're the CEO of your business, you should have the best tools you can have, in my opinion. All right, well, you can see the pound US did get long. Again, if you did get in sync with the purple trade before the green trade set up, that was the correct trade for the trade plan, and it just hit its targets. It's on its way to target 3. If you didn't get in sync with that, you had these other choices here, and this green trade here would be the one. And we'll see if that can get far enough up. The NQ hasn't really gone anywhere. And looks like you're getting long on the Euro US if you're staying with that purple trade. Let's see. Well, there's a green trade now. Yeah, you would have triggered into the purple trade already. So probably the purple trade is the one. If you made the adjustment, I don't know, did you get there? No, 31. 31 would be the entry if you made the adjustment, right? So probably still flat, I'm thinking. Heck, you might even still be short if you move your stop up to 31. But that is a new entry there at 33. By the way, the Russell never stopped out. The Russell never stopped out, dropped like a rock, hit all its targets. The stop moved down. Remember, it's after the bar closes. So it was already down here when it stop moved. Still going, and one and done on the Russell. Spotlight did things a little bit differently using the momentum bar. This is a tough call. You have to make a decision if you're going to get in sync. If there's a setup moments before the start time, and I think you could make that argument. I'm not really, doesn't bother. So right here was the first trade of the day, and it was like half a minute before the start time. So right at the start time, you had a chance to get in on it, which I think that's okay. If it's right there, it hasn't really moved, and it's right moments before 9:30. Because it's a momentum bar, and it's purely price action based. But if you waited for the fresh setup, then you'd be in that one. So that one's already hit money management, and you have to borrow the stop from the prior trade, because that's an add-on. If I had add-ons off, you wouldn't even see that trade. And that, I have it set up to look like counterpunch with you could do that with Spotlight, because we're using counterpunch style setups, which is one of the reasons why it works so well. It's very accurate, but the setups are not the same, but different set of rules, different requirements. But you can see that it's one tick shy of it. It's actually just hit target 2, 65.6. Well, it missed by one tick, 0.7. If you took the yellow trade. So either way, it's a winner. There it is, just hit it. And that's a momentum bar, not a range bar. Pretty cool how that works. Really like Spotlight a lot. And still trailing. If anyone took that Russell trade, you are loving life. Stop is at 1366.1 now. Dennis, that's the new strategy coming out, Spotlight Power Trader. I've been working on it for over a year now, and it's getting close to prime time. Its release will be sometime in June. Is that Spotlight you're using on 377? I have a short on my CPTYM. Yeah, there was a short, and that's not Spotlight. This is Counterpunch, and it was one and done. It did get short. Hopefully that's the one you're referring to, Brian. Right there at 846. Full target winner. One and done. Mo, I'm not really doing end of day trading these days. For me, it was just too much chart time. And also, I've just got so much more I got to deal with right now that I haven't had time. I got to give my eyes a rest. I don't have one, Mo. Spotlight right now is primarily a day trading strategy for range style charts and tick charts. So all the different range bars that you can do, there's plenty. Now, you could do a swing trade chart using those type of charts. It just wouldn't be your typical 4-hour end of day. You find a range bar or a tick chart that's, roughly the same speed. It'll never be perfect, as you know. Those will work great. I'm so confident that Spotlight, you plug it into any sort of range bar, tick chart. Mostly, I think range bars are better than tick charts even, and you're going to love it. So you could swing it with that in mind, but those are challenging from a time management point of view. I understand that. But it is not yet ready for time-based charts, and I kind of think of an end-of-day chart as a time-based chart. Think about it. Yeah, and as far as swinging, the strategy is gonna work because it's dynamic. So on a swing trade basis, I just haven't given it a lot of effort yet. It's still not, just getting it ready for the two platforms we have. Trust me, it's not easy coming up with a great strategy, especially one that's supposed to beat and be better than a great strategy. Because Counterpunch, that's a hard act to follow. It's hard to beat Counterpunch. I think I did it. I think Spotlight is going to beat Counterpunch, but maybe it can't do as much. And there's some things with Counterpunch you just don't want to change. I mean, I even had to borrow some of the best parts of Counterpunch to work into Spotlight. I mean, Counterpunch is something else. But Spotlight, for what it does, I just think it wins more often. It's got a higher win rate. And that is, mission accomplished on my end, I think. I think I was able to create something that actually will be better, but maybe can't do quite as much. So, can't force a round peg into a square hole. Yeah, Brian, there could be a little lag. I mean, it would only be a few seconds, though, I think. Is that reassuring, or are you being sarcastic, Keith? Here's the thing. My mandate is to come up with strategies that are better than the ones prior. It's kind of hard to beat a strategy that works really well and has no reason to not work. Trend Jumper still works great. There are some things Trend Jumper does better than Counterpunch. I mean, and everyone who got the SST in the early days, I know traders that still use it. They just kind of turned off everything else. They don't listen to the marketing. They just keep using Seven Summits Trader, and they love it. There's some things Seven Summits Trader can do that are pretty remarkable. So it's, different flavors, different styles. But for me personally, I'm loving the new strategy. My style of trading. I mean, these are strategies that do reflect my personal style. Right on, Amit. Yeah. You know what? Fill in the gap and then some. Oh, that's fine, Keith. Counterpunch is, it's not going to ever stop working. What you could do, though, is become better at it. The thing with Counterpunch, the secret to unlocking Counterpunch is to move beyond the basics. You have to learn, if you really want to improve your results, it's going to require a couple things that are, you have to learn. One is extreme patience. And the reason why I say that is because of number two, which is waiting like a lion or a tiger in the grass to pounce on the best setups. And so you have to learn what those are. Learn what the best setups are because they reoccur over and over and over. And then you wait for them. Talk about that a lot in the boot camp. I'll point them out to you when they happen in here. Unless you just got a trade plan that's like the Energizer Rabbit, which just takes a licking and keeps on ticking, like the Russell. There's nothing to even wait for that. You just do the trade plan. Don't worry about stuff. Every now and then a trade will lose. Yeah, amazing. All right, so the momentum bar on the YM got short finally, and it already hit money management. Let's see if that can get it finished, but definitely move your stop down if you're in that trade. Checking back with soybeans. Soybeans stopped out, so the soybeans, the only kid on the block that didn't want to join the party. One and done, that's a losing session on soybeans. So, yep, even the mighty counterpunch is going to have a loss from time to time. I'm borrowing from the Seven Summits trader verbiage from the past because it used to be referred to as the mighty SST. All right, anyway, there you go, NQ. A lot of selling going on. And it makes sense when you've got everyone in headline news, talking about how great everything is. Amazon hit 1,000, pop the champagne corks. Pound US, depending on where you got long, if you got long on the green trade, I pointed out, just hit target 2 for 23 pips. Make sure your stop is, you can borrow the green stop. It's definitely trailing from a prior trade. It's in the correct place now. And look at target 1 on the Euro US. 1242 was target 1. It got to 1241.6. You never want to fight over a fraction of a pip. You got to be able to mark it out of 25% of your position, make it a profitable trade, move your stop up, lock in for the rest. That'll be one and done as well. Got to trade for profit. It's amazing how the Russell almost stopped out at a partial profit. And the way we do our stops, keeping it. Notice that with the market, the price bar is moving lower. The stop didn't. People always ask me, why is that? Why do you do it that way? It's because of this example right here. Got the benefit of many, many years, not only trading, but watching these markets, calling them live in a trade room. And, you learn stuff. And that's one of the things that we've learned is how to work around those key levels and keep that stop where it is until it's time to move it. What a difference one bar makes. This bar closed above the signal line, so we're not going to move the stop down. This bar closed lower, but the signal line didn't. The signal line is at 0.2. 2 ticks above that is 0.4. Notice the stop, though, is at 0.6. All those things made for the home run trade. Maybe a grand slam trade. I mean, that's an amazing trade. Still going. 1 tick, 2 ticks. I mean, the price did stab up to 0.3, 0.5. There's a bar that stabbed up to 0.5. The stop was at 0.6. The power of the key level. The YM momentum bar also one and done. All right, so finally stopping out here at 1355.7. 1355.7, getting short at 1372.4, almost 17 points. One and done for sure, Amit. Who knows? Maybe you need to take the rest of the week off. Send a postcard to the people at Beige Book and say thank you. Yeah, that's the thing, Amit. We could all speculate, but in the end, no one knows what's going to happen. We don't have control over what's going to happen either. All we can control is our ability to be stoic and disciplined or not. And so this is a really good lesson to learn, because if you're still afraid of the trade or fearful or something's causing you to hesitate or try to interject yourself into what's going on other than just doing your trade plan, that's a real problem. That's going to end up with causing losers, even though the strategy wins. So you have to solve that. And that's where the steps to success guide is so critical. You really got to work on yourself so that you can do what Amit did. I mean, yeah, it certainly looked like an intimidating session starting this morning, but no one knows what's going to happen. Everything changes, but the strategy puts the odds on your side. So as long as you have the odds working in your favor, let the odds do the heavy lifting. Not everything will win. It doesn't have to, though. We know business is going to ebb and flow. As long as it flows 2 steps forward, 1 step back, I kind of think the counterpunch on the right charts, if you're doing it correctly, is going to go 3 or 4 steps forward and then 1 step back, occasionally 2 steps back. But then you'll get 5 or 6 steps forward. It's better than 2 forward, 1 back, I think. Maybe some of you either agree or disagree. I don't know. I just personally think if you're doing it properly, and again, it's still, you're at the right edge of the chart. You're always going to be at the right edge of the chart. When you make a trade, you do not know what's going to happen next. Nobody does. And you have to be at peace with that. So it starts with proper risk and money management, having enough belief in your strategy to know that the more you trade, the more the odds work in your favor. If you stick to the strategy, I'm not saying the more you trade each day, I'm saying the more you trade the trade plan session after session. Your goal is to quit positive most of the time while limiting your drawdowns. And so it's a day-to-day thing. It's a running a business, showing up to work every day type of thing. And then you let the odds do their magic. And every now and then you're going to hit it out of the park, like today. And this could happen more and more often as the markets get more and more volatile. And they've been very slow, and there's been a lack of volatility. The VIX has been very low. Everyone's on wait and see, gridlock in politics, all that stuff. And what happens after a market slows down? It speeds up again. And you're going to make 80% of your money during 20% of the time, the 80-20 rule. So it's a matter of discipline. Can't be disciplined if you don't believe in what you're doing, and you can't believe in what you're doing if you haven't done the foundational work. It all connects. Michael, that's a 6-tick momentum bar, and I think that's a pretty good one. You might try looking at an 8-tick or a 5-tick. I think the 6-tick is a good compromise. I also think if you're going to use this type of chart, you look for 1 to 3 trades max, and you be very careful on choppy, tight range markets with lots of whipsaw, because momentum bars, that's one of the things that they're not very good at. But as soon as the range starts moving, they're the best. So you try to get it done quickly, right? If you're going to fast test it, which I would highly recommend, try to quit positive a majority of the time. Just count winning and losing sessions to start. Just limit your trading to a very tight window, either a quantity of trades or a window of time. Fast test it. And if you like it, then take it to the UTA. But that's how I would approach this. And I think trend mode is the right way to go. You could try hybrid mode. Try hybrid mode, which is standard mode, but you don't stop and reverse against the direction of the directional indicator there, the red and blue line. And that'll help you get white trades, right? Because the white trade, when you're out of sync, when you're half a step behind the trend indicator, those white trades could be really good and you miss them, right? Like this would have been a setup here. Not sure why, other than the fact that it was blue. I probably have my start time set. I think I do. If I change my start time, yeah, see the start time, this was maybe the problem with the, let's see how it changes. See, there's a white trade, which is a good one. You would have missed that even if it was standard mode, though, because by the time it became valid, the price is already down here. It moved too fast anyway. So this would have been the trade regardless, the first green trade. You didn't get quite enough of a pullback here to give you a short setup. It would have been great to get a short setup right in this area. You could see the action, small reaction, subsequent action. Another reaction that gave you a setup with a new action move down that the green trade was able to pick up. And now the action moves are slowing down as it's starting to bottom out here, or at least consolidate. So getting used to range and momentum bars, of course, takes practice. One thing you could do with them, if you know there's a setup imminent, you could practice anticipating where the bar will close and where the entry will be, and you can get your trade placed before the range even finishes on the bar. And that's very helpful, but you have to be very attentive because the range could change. So what I'm saying is, like, let's say you think there might be a long trade on this red bar forming here, and you know it's a 6-tick range bar. You could follow the range before it closed. If the low is 34, you know the high is going to be 40 and the entry is going to be at 42. And you can get your trade placed in advance. But if the low changes, then the high is going to change and your entry might change. So then you have to cancel and replace. You have to get good at that. But it's worth practicing in a sim account because that's one of the good things about range bars, and the real good range bar traders know this already. You can learn to anticipate the setup in advance and get your trade placed. You just have to, again, be very attentive. You might, there's going to be a lot of cancel replaces, but so what? Your trade will be there, and then the thing rockets out, and boom, right? Don't forget the boom part, very important. But you see, that's what's great about range bars. Being able to anticipate the setup in advance, getting your trade done in advance, so you don't miss it when it pops out with force. I would say practice it in a sim account. Get your 25 in a row without a mistake. Get really good at trading with the range bars, because they win a lot if it's a good plan and a good strategy. You're going to love it on Spotlight, I guarantee you that. But it's pretty darn good on Counterpunch, as you can see. We've learned that with the Russell for sure. But but if you start your session and your range bar looks like this, like let's say that you had a big, huge move in the pre-market, down, 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 down. You can see that your action moves to the downside are waning, 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 waning. You can see it bottoming out, right? The last seller selling right here to this guy, whoever bought right there at the low. You don't want to be that guy selling right at that level. So if this is your start time and you see the short, you got a counterpunch short, putting things in context, the more shorts you have, the likelihood is it's going to lose, right? The odds go up that it won't win. You can see the action moves waning, waning, waning. The best trades are the subsequent action moves. When you have an action, reaction into our lines, a setup to go short, and the subsequent action. And that first action's got energy. I mean, you can see that the 50 came up, failed to get above the 200. Remember I said that's a testing area, and if it fails and then rolls over, this whole area in here, those end up being really nice trades. And that's what, of course, this was. We just didn't get a setup until way down here. But if you see this, and then all of a sudden your session starts and you're right in this area, the long trade is going to have a higher likelihood of succeeding, I think, than the short trade. And you can see that it did, almost getting to target 2, even though there was a chop zone there, would have prevented that. But those are the things that you can look for and learn to master and understand. Look at how the high trend turned on this slower time frame chart, and gave you a clue as this is coming up with the cyan line staying above the yellow the whole way up. That's a clue that it's starting to run out of gas in here. You don't want to be one of the last sellers. Oh, look at the market. Trading looks good. Let's jump in now. Chasing performance, getting in at the end of the 2 steps forward. Then the 1 step back happens. Look at that target right there on the gray trade to go long. So I don't know what else to do. We're kind of done. I'm not sure what there is. Everything kind of won. I mean, the Euro US is still kind of going. If you're in the purple trade, it's still going. If you're in the green trade, you haven't gotten there. You're gonna, just got to manage that. But we're done, guys. I'm gonna put a call out for questions. I'm just not going to keep talking for the sake of hearing my own voice. So if you guys have questions, I'm happy to answer them. This is the time to ask. Hopefully everybody enjoyed the session. Goals hit on everything except soybeans. Hey Don, it's just your default settings and standard mode. That's all it is. Turn on key levels and you're there. Yeah, sure, Brian. Yes, 100% guaranteed. I see Stuart's typing something, so I'll wait to see what he has to say, and then if anyone else has any questions or comments, last chance to type them in. Where do I find the trade plan for the crude oil inventory trade? Good question, Stuart. I know it's on the Owners Club, probably in the original crude oil trade plan, but here it is. Nothing changes. We start 2 minutes after the report. We look to get in sync. If there's an active trade we can get in sync with, and damn the torpedoes. That's it. Treat it like a separate session. Don't connect it to what happened earlier. It's a brand new start time, brand new everything. Go with your typical power of quitting rules. Nothing changes. That's all it is. Yeah, sure, John. Stuart, there's also a lot of good videos. If you go to the blog, and I think they're on the Owners Club. Well, I think the Owners Club has a full session, but if you go to the blog, www.counterpunchtrader.com, you could see the last several YouTube videos where I did an excerpt from the trade room, and you could see the live trades that happened, and you might want to watch those. That'll give you you'll see, okay, it's everything I said. It's the same charts. It's just there's that 2 minute wait time and then getting in sync, and that's really what the trade plan is. Yeah, sure. And seeing it live is a good thing. I mean, looking at those videos, because I talk you through it. I'm trading all those videos I traded with you guys, and so you'll hear me talking it through while we're doing it. You'll see how the market reacts, and I'm trading it still with the Thinkorswim platform. So I'm hopping around on one leg, and I'm kicking some butt. So my leg's gotten pretty strong with Thinkorswim. Okay, so John, I'm not sure what to show you on that. Maybe check your calculator and make sure you've got everything turned on. You want to look at that. You just go down to here, and you can see from I-30 all the way down to I-36, everything's set to true. Sometimes it's just a matter of forgetting to make a tick a pip. And so, your trailing ticks got to be 2 pips, not 2 ticks, right? Maybe the adjustment's wrong here. It is wrong. This is new. This should be 20 and 10. So this might change everything. Let's see if it does. Nope, it doesn't. Kind of clean things up a little. But that's a new input, and I guess I never changed my chart from ticks to pips. And all that says is if the stop is a couple ticks or a couple pips inside the bar, then move the stop down to 1 pip below the bar. So that's a new adjustment that was added most recently, even though it was quite a while ago. And that's the trailer right here. So I had trailer bar tick set to 2, and it should be 10, 1 pip below the bar. And trailer bar adjust, meaning if the trailer is inside the bar, and I had that set to 2 ticks, which is the default, and I wanted it to be 2 pips. So I changed that just now. That's what it should be, 20 and 10. Make sure you guys get your calculator right on that. But that didn't affect the purple trade. Keith, Forex are time-based on MT4. It's MT4 that's time-based. Rashid, no, there's no live trading tomorrow. Tomorrow is an off day. The live room is Mondays and Wednesdays. So I've got the key level adjust set also, John, but you'll notice it's all set to zeros. Like I've got the 10 pip level as a zone and the 50 pip level as a major zone, but notice that all my entry, stop, and targets are all zeros. The only reason why I set it to true is so I can turn on the rounding, round FX to pip, set to true. And then there's a rounding zone of 7 pips. So if it's 8 or 9 pips, it'll round to the nearest dot, to the nearest entry or stop. But if it's 7 pips or less, it'll push everything out. Does that make sense? It'll push the entries away and the stops away. The stops away with the extra digit, with the fractional pips. So that's a good one to use, I think. You want that. Rashid, we will be here on Monday, so we'll be here Monday and Wednesday of next week. We had the 3-day weekend, of course, so today was only one session this week. And, the crude oil report is tomorrow. So I'll trade it. I'm sure most of you will too, if you're a crude oil trader. Tomorrow I have to demo Counterpunch to new people that are just checking it out for the first time and want to see it live. So that's happening tomorrow. You guys are already here. I think what you saw today, if it's your first look at Counterpunch, hopefully you like what you see. Rashid, I think it's at 10 a.m. Again, though, it's not. If you've already done Counterpunch, you're here already. You don't really need to be there tomorrow. Kind of a waste of time. Am I going to demo it live? It's. I hope so. It's going to be one of those things where I'm teaching it on the fly, trying to demo it live, answer questions. It's starting at 10, so it could be when we're already done. A lot of the trade plans will be done by then. So we'll see how it goes. Maybe we'll invite everyone to stick around, and I'll do the crude oil report live. We'll see. Just going to see how it goes. I mean, see if we can get all the questions done and get the thing wrapped up in time. Within an hour, then I'm thinking we'll trade the crude oil report live. But that's kind of tentative. That's kind of what I'd like to do, but we'll see. All right, guys, I'll give you a few more seconds to ask any questions that you think of at this final moment before we say goodbye. And with that, everyone have a great day. See you guys next time.